Right, so welcome everyone. It's Monday the 29th of October 2012 and WMD here with weekly market review. We're going to be taking a look at the Forex markets today, a handful of charts. Just before I get started, maybe a few notes to run through. First off, in terms of the purpose of this session and what we're trying to do by presenting this analysis is just to establish a general sense of direction for the market movements, to understand how price moves. We want to isolate key lines and levels which determine short-term, intermediate and long-term directional biases and trends, and then over the course of the week hopefully we'll be able to take advantage of that knowledge by placing good risk-defined trades. And ultimately we want to be doing that at prices and places where it's a black and white conclusion rather than a shade of grey. Taking a look at the economic calendar, fairly light for today. I guess probably the biggest event taking place and something which a lot of people are monitoring quite closely is Hurricane Sandy, which is striking the coast of the States over the course of the next couple of days. One of the things which I have been thinking about this particular event is that sometimes, often these storms, they tend to have a little bit of a build-up, and then when the hurricane kind of hits land, fizzles away. But what would be the impact of such an event if, God forbid, there were to be a disaster, and if it were to cause huge kind of damage? I was looking back at the charts of some of the yen crosses going back a little while to when the tsunami struck Japan, and you can see the kind of results that took place at that time on the yen crosses. The kind of volatility that occurred around that time. So you had quite broad movements to the tune of hundreds and thousands of pips and over a course of a very short space of time. Right? So we saw the dollar yen move 500-600 pips in one direction, and then another 500-600 pips in the other direction, trying to find its ground. At that time, a lot of people, they put it down to the basic concept that there's a repatriation of funds taking place. Insurance companies are going to have a lot of liabilities to deal with, and generally the way that insurance companies work is that they collect the premiums and then they take those premiums and invest those in the markets around the world, looking to make a profit on those. But when they've got to be paying out, they need the money in the currency in which they collected those premiums so that they can do those payouts. So just something for kind of consideration, something to bear in mind, that if, like I said, God forbid, if it does turn into quite a serious event, then you could have a lot of volatility. I mean, here we're looking at the yen, but in this case, broadly, we would be looking at the dollar crosses, and we could see a lot of volatility develop on those pairs. The general course of action would be that if that happens, you don't ever want to find yourself to be fighting the momentum. You want to try and you want to find a reason to join the momentum, regardless of the direction in which it breaks. So just a kind of general guideline there over what's happening with Hurricane Sandy at the moment, and possibly the likely impact that it could have on the currency markets. So aside from that, quite light on data today. We do have later on to look forward to a release from the Bank of Japan regarding their monetary policy. Interest rates in Japan already pretty much sitting on the floor and widely expected to hold. Tomorrow we've got Italian 10-year bond auction, which again the markets have been monitoring the bond auctions quite closely over the course of the last few months and years. Over the course of the last few weeks, in particular in the last 6 to 8 weeks, actually we've seen European bond auctions being pretty well subscribed to, right? So that's quite important for a kind of general sense of confidence in the markets. On Wednesday we have the Canadian GDP. Thursday is all going to be about manufacturing PMIs. We've got Chinese manufacturing PMI data coming out, which of course tends to affect the Aussie and the Aussie crosses a lot. And as well, we have manufacturing PMI coming out of the UK. Still a little bit of sense of disbelief that GDP increased so much in the UK and that we've come officially out of recession. A lot of talk that this was just an Olympic bounce, and the British economy actually still kind of teetering on the brink. And then to round things off on Friday, we have Canadian employment numbers, but I guess the big event, as usual, is going to be over in the States with the release of the non-farm payrolls data, which I think everyone tends to look forward to, regardless of whether you're a player or just a casual observer. So quite a lot there coming up later on in the week on the calendar to look forward to, and I'd be suspecting a fair bit of volatility to develop over the course. So let's turn our attention towards the charts and see how things have been developing. We're going to take a look at USDJPY first off. This is one that we've been monitoring for a long while, and in fact the last time that we looked at this particular pair, we were talking about the trigger lines on USDJPY. So there was our trigger line looking for a break north, and this was our trigger line in case the price broke south. The last time that we were looking at this particular instrument, the price was here around 78 handle, and we've seen a support being established on a lower time frame. We were looking to get long on the USDJPY. Consequently, she's broken north to the tune of about 200 odd pips from there. It's a good trade. Hopefully many of you had an opportunity to catch that. She's gone and hit resistance now, and we can see that in the historical sense here, as she went and approached and just broke through that 80 handle. My general expectation for the pair is that I would suspect that we are going to get another pullback on USDJPY. Once we've had that pullback, at that point I would start becoming interested in the long plays again, and at that point looking for a higher high to be established. As far as the trigger for that is concerned, it is our trigger line. It's something that we had much resistance on our charts. Now that the price has broken firmly through the trigger line, any pullback toward that line, well, it acted as resistance. So we can have fairly reasonable expectation that on a pullback toward that line, we would get some element of support kicking in there. In particular, I would be looking around the 78 handle if the price were to pull back to there for some signs of support, and then if she starts to break in the direction of my expectation, I would be keen on getting involved in a trade in and around that region. Okay, let's turn our attention towards the dollar Swiss. Dollar Swiss is one that we've discussed almost every week for the last 3 months that I've been doing, that I've been presenting here, and we're going to revisit the analysis that was presented last week, which is that we still have our resistance block, which is coming in between the 94.30 and 95 handle, and from a technical perspective, as long as the price is remaining below that block, she is a technical short. From a price action perspective, though, one of the things which we highlighted was that if the price does end up going into a prolonged range over here between the 92 and the 94 handle, so we're looking for several waves up, we're looking for several waves down. At that point, we would consider the instrument to be basing. And if she does end up playing out like that over the long term, then we would become happy buyers on dollar Swiss, looking eventually for a continuation to the upside and back into those upper 95s, 98s, 99s, heading possibly back towards parity. So she's as far as the current price action is concerned, she's between a little bit of a rock and a hard place. Technically, from a structural point of view, the net bias, as long as she remains below that resistance block, remains toward the south. But if she does start engaging in that basing pattern, at that point we'll start getting excited about taking long trades. We'll become happy shoppers on this instrument and looking eventually for a resumption of the dollar strength against the Swiss franc. Last week, you'll remember, I had a long trade on, which was from around that 92 price handle, and so I took the opportunity around the middle of the week to cash up on that trade. It bought me fish and chips, which was still kind of worth the effort of engaging in that trade. But I have a certain perspective here about how I'd expect the price to play out, and once we see price playing out in that way, we can start taking more risk-defined trades and going in full sizes rather than taking the play positions. Okay, let's turn our attention towards dollar CAD, mostly because we're in a trade here which is heavily in the money. So if you're in the if you're checking the post-FOMC charts which I posted on the blog last week on Thursday, I posted this dollar Canadian trade looking for a long on the dollar CAD, and considering that a significant low had been established here around the 98.80 area, I'm believing that we have a sine wave setup here on the dollar CAD. What that means is that if this is our if that line represents our sine wave, at some point the price is going to go and strike the underside of that line, and that becomes the objective to the upside. So the trade is up to the tune of about 70-80 pips. Taking the opportunity to take a few chips off of the table with it. If it happens that the price pulls back now on the dollar Canadian, as long as the low is not taken out, we're considering this 98.80, 98.90 to be a significant low. As long as that price is not taken out, as long as the price is not pulled below that level, then the long play in dollar Canadian remains intact, regardless of what's going on with Hurricane Sandy, regardless of the Canadian employment data that comes out, and regardless of NFP. It's a technical setup that we're playing here, and so our bias is fairly well established. We're going to try and ride that to conclusion. In fact, if we zoom out a little bit and if we just narrow up the chart a little bit, you can see, if you go and strike the underside of that line today, you're talking of a target of around about 101.50, 102, which says that there's a considerable number of pips to be played here. So I know a lot of room members are in on this trade. You have to hold your nerve with it a little bit. It's a position play. We've got a very, very tight entry. With ultimately our T2 target, which will be down in that 97.30 area. So multiple waves here. We're looking to ride her up. Once she's reached the upper target, then at that point we will start looking to ride her south, because we will have had our sine wave completion. So we're going to be looking for T1 and T2 on the dollar Canadian. So like I said, if you see her, as long as she does not take out that low at the 98.80, 98.90 area, technically the dollar Canadian remains a long until she goes and strikes the underside of of our sine wave. That's what we're going to be looking for in terms of completion. I just want to point out, usually when you're drawing the sine wave, you can take it from multiple highs. So I would draw a second line just taking the high there. It's not as sharp as the first line, so you could potentially get completion as she hits the underside of one or the other, but that is our target. That is our target heading north on this particular instrument. Okay, let's turn our attention towards more of our favorites. EURGBP, again, we've been doing an intensive study of EURGBP over the course of the last few months. Really, if you've been here, you've seen how these moves have been mapped out, wave after wave after wave. Last week when we were looking at this instrument, and in fact over the course of the last few weeks, every time I've come to this analysis, I've said it's all now about this 79 handle and what happens when she reaches that 79.50, 79.30 area. She's not very, very far away. We've rode the instrument north on several occasions. That is my net bias on the EURGBP. Eventually I'll be looking for her to make a move into those mid-80s, 85, 86, 87. But what is very important is that if she comes and she makes this block needs to hold the price, and as long as this block is able to hold the price, once she starts breaking north, we'll be adding on to the trades again, looking to ride her for the duration up into that 85, 86, 87 area. Now, one thing which I want to mention as a note on the EURGBP is that I'm kind of net long on the EURGBP. That is my bias, and I put my money into those trades. I let it go to profit. I take the chips out of the table. She pulls back. I go again. But when she's heading down and she's kind of going against my net general bias, I have a very, very healthy fear of the market, right? So this bias, if the price ends up breaking down below 79, it finishes, right? It finishes right there. I will not hold on to that bias if the price is broken below 79. Rather, at that point, I would sit and I would wait. And if I see a momentum break north, at that point, I would get excited about it, because when we take the trade, I've mentioned it many times before, if you're taking the trade, you want the wind to be in your sails just a little bit. So you have to choose how aggressive or how conservative you're going to be. If the price drops down to that 79.60 area and you leave it alone, and you see that she breaks back up above the 81 handle and she's here in the 81.50s, you can buy with confidence at that point, because I guarantee you, and I will pay your stops on this one, if she goes back to the 81.50 handle, she's not going back down to 79.50 again. At that point, she will break north and she will head into those mid-80s. We're playing a complex pattern completion here, but I will hold that analysis as long as the price remains above the 79 block. So EURGBP, in no man's land right now, not keen on taking a trade at the current price levels that she's at right now. I would rather wait for those lower 79s, or I would wait for a break up above 81.50, and at that point I would look to get excited about EURGBP longs again. So like I said, I have an analysis. If she's playing out according to my price expectation, then I will take the trade. If she's doing something contrary to that, then we have to let the analysis go and we have to put it in the recycle bin, and then right click and say empty recycle bin, right? You just kind of have to leave it alone at that point. But as far as the general analysis is concerned, I think when I first started presenting here on FX Street, the price was around here, and at that time I gave a very clear analysis. We're looking for a break north, one south, another one north. We've had that. Last week we were looking for a break south. We seem to be getting that now, so it's about this block, and then we're going to look for her to break north and then up into those mid-80s to complete this current formation, this current pattern formation that we have on the EURGBP. Okay, the next one up, there's a lot of tips. There's a lot of tips being shared out from last week's analysis, but pound Swissy, hopefully a lot of you guys took this trade. So last week's presentation on the pound Swissy, we were talking about a counter trend long trade. on the pound Swissy, and pretty much right after that presentation over the course of Tuesday, she kind of broke up, went into that consolidation. It gave her an opportunity to take that long trade, and she rushed to the tune of about 250, 260 odd pips. I still think that she's going to break a little bit higher. She's going to break up to that 51.50, 52 handle, which is what I was talking about last week. My net bias actually, and this was considered a counter trend trade, if you were here last week, my net bias actually on the pound Swissy is short. The pound Swissy moves or is inversely correlated to the EURGBP, and what I'm looking at on the pound Swissy, in fact I'll just kind of mark it up here on the chart, and you'll see how these lines work, how these lines work to a T. But if we just mark the highs, what I'm expecting is actually that the price will break north, and she will head up into that 51 handle. At that point, I will start looking for failure on the pound Swissy, and I will start looking for a trade south on the pound Swissy. That will need a confirmation. It will need for an hourly to turn. It will need for a 4-hour candle to turn, and as well, there's a little bit of intermarket analysis to be played here. So if we're seeing the EURGBP around that 79 block, which is where we're looking for her to turn from, 79, 79.50 area, and we're seeing that the pound Swissy is up there around, up above 51, so 51.50, 52 handle, then you can take your pick, whether you're looking for the EURGBP long or whether you're looking for the pound Swissy short. Just be very, very careful about your exposure. I would not be looking to get involved in both of these trades at the same time. If I end up involved in both of these trades, it would mean that the first one that I initiated would have to be in the money before I look at committing on the other pair, because like I said, they are inversely correlated. It is effectively taking the same trade. I like the EURGBP because of the very clean structure that it has. So it's had a very clean kind of support resistance, support turns to resistance, resistance turns to support structure going on. On the pound Swissy, we've got our lines to play, which sometimes are not as clean or as clear, and the price does tend to kind of push through. You get your overthrows and you get your throwbacks, right? But from a volatility point of view, for every pip that the EURGBP gives, the pound Swissy tends to give 2 or 3 times that. So if you like the volatility, if it's all about the money, then the pound Swissy is probably going to be the one. That you're going to be concentrating on more than anything else. Okay, what else have we got to take a look at? We've got to take a look at the EURJPY. We're going to take a look at the Euro Canadian, and then we're going to take a look at the pound Kiwi. All right, and the pound Kiwi, I think there's an amazing trade coming there. So let's rush through the EURJPY and the Euro Canadian, and we're going to come to the pound Kiwi. Okay, so it's the EURJPY. We saw quite a strong move up. Over the course of the previous weeks. Last week when we were looking at this pair, we boxed off the 103 zone. We were looking for support around the 103 area. Consequently, the price made its way down. She had quite a strong bounce from 103, and here we are again in that same kind of price area, in that same price block. For the time being, she's been falling, and if she's been falling, and she's falling into these support blocks, you don't necessarily want to be selling while she's in a support block. But my actual expectation now on the pound Swissy is I rather suspect we may well get another bounce here heading into the mid 103s, but where I would really become a happy shopper on the EURJPY is if the price fell back down to the 101 handle. That is the area that would excite me the most. So if we see a fall down to the 101 handle, and we get some consolidation in this 101 handle, seeing that consolidation would give me a very firm expectation that we're going to get a break north on the EURJPY, and when that break north happens, actually we're going to get a push for a higher high, and that is when we're going to break through the most recent high, which has been established here around the 104.40, 104.50 handle. All right, so So I'm looking for the EURJPY to break down. I won't necessarily be trading it south, but if she does reach the 101 block, then I would consider that she's moving according to expectation, and at that point I would start considering the long trades on EURJPY. So still some element of correction to take place here. There are other lines and levels that you can mark on this instrument. We have a support resistance wall, which you can see here, and she seems to be bouncing quite firmly from that wall every time she goes and retests it. But my experience with these support and resistance walls is that usually once you've drawn that SR wall and the price comes and retests it, what it means is that the push is in the direction toward the wall. So she tends to bounce, pull back to it again, bounce, pull back to it again, bounce, bounce, pull back, bounce and pull back to it again. As far as the most recent resistance level is concerned, we've got that around the 103.20 area. So as long as she remains below 103.20, she remains a tech short. Only a break above the marked support cluster actually brings the buyers back in charge. So like I said, my net bias on EURJPY is long, but I suspect that she can give a deeper correction, and the area to be looking at is around that 101 handle for more significant position plays on the EURJPY, and at that point maybe worth looking for the higher highs on this particular instrument. Euro Canadian, we were looking at last week, and we marked off support resistance flip zone on the Euro Canadian. So we had a double top that the price broke through, and so it was resistance, it was support, and our expectation was that any time it pulls back, we would have support here in the same block. We're seeing that support holding quite well. So again, from a technical perspective, as long as the price is remaining above this 128 handle, our net bias on the Euro Canadian remains long. Only a break down below 128, and maybe that would have a confluence with a lower trend line that we're able to draw here, would change that bias and would have us sitting aside, waiting for price structure to establish, which would allow great interpretation. So based upon the current price structure, it is still all about the 128 handle. As long as the price is up above the 128 handle, then this instrument remains a technical long. Remember, from an analysis perspective, you're always better off looking at the charts which have the cleanest structures. We don't want to be wasting our time with stuff which is very hard to interpret. We just want to be kind of leaving that stuff alone, right? So when you have nice clean price structures, when you see resistance turning support, support turning resistance, it is black and white. It's not a shade of grey. It's very, very easy to make a decision at those price levels, and as well, they give you good risk-defined entries, and that's what the game is all about. That's what allows you to make the money and pay your bills when it comes to trading. Okay, last one up. We're going to take a look at the pound kiwi. Quite excited about the pound kiwi. You might remember from back in September when I had that short trade on the pound kiwi, and we pretty much caught this trade at the very high up there, just as she went and hit the 2 handle, and she was just marginally above the 2 handle, but we caught it literally at the high, and we rode it all the way down, heading to our T1, which was in that 94 handle area. Now, one of the trades which we highlighted on the pound kiwis that we had, from a structural point of view, we've had a nose. I'm just going to change the here and maybe go with a red here, but with a nose which is established up at the 99 handle, and I've mentioned several times that if the price goes and hits that nose, expectation would be that the sellers would kick in quite heavy around that 199 handle, and we would be looking for the price to break down at that moment in time. My analysis has shifted ever so slightly now on this instrument, and my expectation has changed. So I just want to kind of share that with you. But what I'm believing right now is that the price may not go and make that 99 handle. and I would suspect that any rallies that we get up to that 99 handle, she would fail before the 99 handle, and that those rallies they would end up getting sold. And eventually what's going to happen is that the price is going to drop. And here's the kind of key element of this, alright? So really sticking my neck out here quite far. But the pound Kiwi, we're going to see a flash crash on the pound Kiwi. When I say flash crash, she's going to cover a lot of distance very, very quickly. I'm looking for a move down into the lower 90s on the pound Kiwi. She's going to come and do a retest of this price block around here. So we're looking at the 90 handle on Kiwi, and when she drops there, she's going to drop hard, and she's going to drop very, very heavy. That is what I'm suspecting. So maybe there's room for another rally here back up towards the 97, 98 area. But if she starts dropping, if there's signs of momentum as she's dropping, give chase. You're going to make a lot of pips very, very quickly on this instrument. Once she's gone and hit that 90 handle, alright, so it's a little bit of voodoo here. It's pattern completion. If you want more on this, you've just got to go to the website wmdforex.com, tradingwithdeadlyaccuracy.com. Just watch the videos in the elite section in the video library, and you can read up all about the sine wave there and watch the videos explaining this pattern and explaining this formation. But I do have an expectation that she's going to break down, and we're going to be looking at the price hitting. We're going to be looking at the price hitting the lower 90s. Once she's made those lower 90s, then she will break up, and it'll be back up towards the 2 handle, and possibly even through it. Right. So what I'm talking about is that, look, there's potentially 700-800 pips to the downside. Once that downside has completed, then there's an equal number of pips heading north on this instrument. All right. And how long this is going to take to play out, I don't know. I couldn't tell you right now. But I have a very, very firm expectation that is something that is going to happen. There's a lot of stuff happening this week. We've got this hurricane Sandy hitting the States. We've got NFP release coming up at the tail end of the week. Anything could become a trigger for it. Anything could become a trigger for it. So quite a wide view here. Whether it's going to be tradable from a risk definition point of view, I'm always very, very careful with this, because we're talking about quite a wide range here, and sometimes you have to allow too much leniency. And when you allow that much leniency, actually what it means is that you don't end up necessarily taking that trade in the first part of that wave, but you end up catching a small part of a much larger move, I guess. Alright, so it does come down to risk definition, but I would very much suspect that any rallies now are going to get sold. They could get sold at the high, so around that 98.20, 98.30 area. It doesn't look like she's going to make the nose. Anytime she comes close to it, she's been failing. Failing near that level, so it's no longer necessarily a nose trade, but just looking for an extension to the downside out of this quite wide consolidation that we've seen here for the price, and for the price to go and test those lower 90s before eventually breaking north. Okay, so that's the pound Kiwi. I think it'll be quite exciting to watch over the course of the coming weeks how that plays out. Remember what I've said, it is all about risk definition more than anything else, and if you can narrow down that risk definition and get in with a sharp entry, I think that there are a heck of a lot of pips to be played for on this particular pair. It's one that I'm going to be trading very, very actively over the course of the coming weeks. Okay, that's your lot for today's presentation. Those are the charts I wanted to cover. It looks like we do have a little bit of time, so I'll just quickly work through any questions which are coming up. Just a quick question from FX Tough 101. Is the S wave the same as a wolf wave? No, in my estimation, wolf waves are they're not very effective. I think they have to be quite precise when you're working those out. And S-wave is very, very specific. It has a very specific structure, it's just a sine wave. You can do some reading about it on the net, but I have documented the sine wave in a lot of detail on my website, and it is something which I play very, very actively. It is worth taking a look at. John, if you're bored, mate, I'm going to sort you out next time I see you, buddy. You better not be bored. All right. All right. So it's not a wolf wave. I was going to say some quite derogatory things about the wolf wave, right? But I won't. Let's just put it this way: any price action technique, trend line technique. I've been doing this now for almost 8 years, and I'm familiar with pretty much everything that is out there, every single technique, and it's a case of recognizing what works and what doesn't work, and wolf waves, in my estimation, they just don't work. All right, so we don't want stuff which is going to give us coin flip accuracy. We want the stuff which gives us positive expectation, I guess, and that is really the key issue. And I've spent the last decade collecting all those methodologies which allow for positive expectation. They allow me to establish bias and to take those good risk-defined entries. If you've been attending over the course of the last few months, then you'll realize pretty much week after week, price plays out according to expectation. We tend to hit very few bad ones, right? What is the sandy wave? Joker. All right, it looks like that's it. There's not very many other questions up there, so we'll leave it at that. Thank you very much for attending. All of you, thanks as well to the team at FX Street for allowing this platform. I've done this presentation at a later time than usual. I do believe that next week the presentation will be back to its original slot, which will be 10 a.m. GMT, which is 10 a.m. local time here in the United Kingdom. You're all welcome to register for that in advance. If you have the opportunity, please do as well. Check out my website. It's www.wmdforex.com or www.tradingwithdeadlyaccuracy.com. It is free registration on there. You get access to a whole bunch of free materials, including some Intro 101 trading videos and access to my trade notes. There are some premium services on there too, so if you choose and you really want to take your game to the next level, you're more than welcome to sign up for some of those. Again, thanks for attending, and thanks for FX Street, and I will see you the next time.